How safe is Procter Gamble Company's dividend? On July 30, Procter Gamble Company's reported fourth quarter and full year earnings for the fiscal year 2019, with the period ending June 30, 2019. This video provides an update on the company's dividend safety using its most recent operating results. Before we begin, I invite you to subscribe to our channel and like this video, which will help more people discover Sure Dividend's investor education efforts. With that out of the way, let's dig into Procter & Gamble's dividend safety. To begin, let's talk about Procter & Gamble's business model. Procter & Gamble is a global consumer products giant. The company sells its products in more than 180 countries, generating more than half of sales from outside North America. The company's core brands include Tide, Gillette, Pampers, Oral-B, and Head & Shoulders. Procter & Gamble has a market capitalization of $304 billion, with annual sales approaching $68 billion. Procter & Gamble is one of the world's most popular dividend growth stocks. The company's current dividend yield is 2.5%. Moreover, Procter & Gamble is a consistent dividend grower. In fact, the company has increased its annual dividend payment for 63 consecutive years. Because of this, Procter & Gamble qualifies to be a member of the Dividend Aristocrats, an exclusive group of dividend stocks with more than 25 years of consecutive dividend increases. Procter & Gamble is also a member of the Dividend Kings Index, a group of even more exclusive stocks with 50-plus years of dividend increases. Looking ahead, investors interested in owning Procter & Gamble stock will likely be interested in the safety of the company's dividend payment. For the remainder of this video, we will discuss Procter & Gamble's dividend safety from four perspectives. Its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. Procter & Gamble's dividend safety relative to earnings. First, let's discuss Procter & Gamble's dividend safety in the context of the company's current earnings. In the fourth quarter of fiscal 2019, Procter & Gamble generated adjusted earnings per share of $1.10, which compared favorably to the 94 cents of adjusted earnings per share in the same period a year ago. For context, Procter & Gamble paid a quarterly dividend of 0.7459 cents per share in the most recent quarter, which implies a payout ratio of 68%. Looking out over a longer time horizon, the payout ratio is slightly lower. Procter & Gamble generated $4.53 of adjusted earnings per share for fiscal 2019. The company distributed $2.90 of common share dividends during the same time period for a dividend payout ratio of 64%. Using earnings, Procter & Gamble's dividend appears very safe for the foreseeable future. Procter & Gamble's dividend safety relative to free cash flow. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare Procter & Gamble's current dividend payment to its free cash flow. Procter & Gamble generated $4.2 billion of cash flow from operating activities in the fourth quarter of fiscal 2019 and spent $814 million on capital expenditures during the same time period for free cash flow of approximately $3.3 billion. The company distributed $1.9 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 58%. Looking out over a longer time horizon, our conclusion is the same. Procter & Gamble generated $15.2 billion of cash flow from operating activities in fiscal 2019 and spent $3.3 billion on capital expenditures during the same time period for free cash flow of $11.9 billion. The company distributed $5.6 billion of common share dividends during the same time period for a free cash flow dividend payout ratio of 65%. Using free cash flow, our conclusion for Procter & Gamble's dividend safety is the same as when we used earnings. The company's dividend is currently well covered by free cash flow, and we see no risk of a dividend cut in the near future. Procter & Gamble's dividend safety relative to recession performance. Companies do not cut their dividends in good times. Instead, dividends are reduced when companies experience financial difficulties. Accordingly, this section will analyze Procter & Gamble's current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by measuring its earnings per share performance during the financial crisis that happened between 2007 and 2009. Procter & Gamble's performance during this time period is shown here. 2007, adjusted earnings per share, $3.04. 2008, adjusted earnings per share, $3.64. 2009, adjusted earnings per share, $3.58. 2010, adjusted earnings per share, $3.53. 2011, adjusted earnings per share, $3.93. 2012, adjusted earnings per share, $3.85. Despite a slight decline in 2009, Procter & Gamble produced an 18% overall increase in adjusted earnings per share during the last recession. The company made a new high in adjusted earnings per share in 2011. More importantly, though, the company's earnings still covered its dividend payment, and Procter & Gamble continued its multi-decade streak of dividend increases. Because of this, we have little concerns about the company's ability to pay rising dividends during future economic downturns. Procter & Gamble's dividend safety relative to its current debt load. The last angle that we will use to assess Procter & Gamble's current dividend safety is by looking at the company's current debt level, which is a cause of concern for many investors. More specifically, we will see how much the company's weighted average interest would have to increase before its free cash flow would no longer cover its dividend payment. At the end of fiscal 2019, Procter & Gamble had $30 billion of total debt outstanding. The company generated $111 million in interest expense in the most recent quarter for a weighted average interest rate of 1.5%. The following image shows how changes to Procter & Gamble's weighted average interest rate would impact the company's dividend safety as measured by free cash flow. As you can see, Procter & Gamble's weighted average interest rate would need to rise above the 6.1% level before its dividend would no longer be covered by free cash flow. While this is lower than we would like, we have little concerns about the impact of the company's debt on Procter & Gamble's dividend safety moving forward. Looking out over a longer time horizon, the dividend appears much safer. Procter & Gamble generated $509 million in interest expense over the first half of fiscal 2019 for a weighted average interest rate of 1.7%. The following image shows how changes to Procter & Gamble's weighted average interest rate would impact the company's dividend safety as measured by free cash flow. As you can see, Procter & Gamble's weighted average interest rate would need to rise to above the 16.3% level before its dividend would no longer be covered by free cash flow. Because of this, we have little concerns about the impact of the company's debt on Procter & Gamble's dividend safety moving forward. Thank you for watching today's video, which performed a deep dive on Procter & Gamble's current dividend safety. We invite you to subscribe to this channel and to like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at suredividend.com.